Hello everyone, we are from Group SMDR and this video is for financial management assessment, and our group consists for 4 members. My name is Muhammad Hasani Izan.
My name is Givaria Kalafifi.
My name is Kinan Potrohman Muhammad Hafiz.
My name is Habib Muhammad Falon.
And we will explain about financial statement from SMDR in 2022 and 2023, and here's the explanation.
So we want to find the liquidity ratio from Samudra Indonesia company, and the first is we want to find the current ratio. So the current ratio is current asset divided by current liabilities. In Samudra Indonesia case is the current asset is 5. It's 5, 8, 9, 6, 5, 5. 8, 4, 6, and then divided by current liabilities 4, 5, 6, 1, 8, 9, 7, 6. And then the result is 2.4. So the every $1 of current liabilities is covered by $2.4 of current asset. And it's in 2023, and in 2022 is 6, 5, 2, 0, 5, 3. Divided with 1,955,610, and the result is 2. So every $1 of current liabilities is covered by $2 of current asset. And then you can see from this result, the current ratio is higher from 2022 to 2023. So we can assume that the current ratio from Samudra Indonesia company is getting better in 2023. And then the second is you want to find the active test ratio. So the active test ratio from Samudra Indonesia company is current asset, that the current asset that we already have the current asset, it's the current asset, and then minus with inventory, and the inventory from Samudra Indonesia company in 2023 is 8, 6, 4, and then divided by current liabilities, and then the result is 2.39. So every $1 of current liabilities is covered by $2.39 of very current asset. And then in 2022 it's the same. It's the same with in 2023. So the current asset, the current asset is increased by inventory, and the inventory of Samudra Indonesia company in 2022 is 3, 4, 2, 0, 2, 8, 3, and then divided by current liabilities, and the result is 2.03. So every $1 of current liabilities is covered by $2.03 of very current asset. And then we can see here the active ratio from the Samudra Indonesia company is getting better in 2023 because it's more higher than in 2022. And then we have the average collection period. And now we're looking for the average collection period of the Samudra Indonesia company. And the formula for average collection period is account receivable divided by sales and then divided again by 365 days. And for the Samudra Indonesia company, the number is 129777906. And then divided by sales is 772404229 and then divided by 300 and then 65 days. Nah, and then the result is 61.33 days. So the analysis from this average collection period from Samudra Indonesia company in 2023 is the average period to collect account receivable is within 61.33 days. And then in 2022 is the same formula with 2023 is, but the number in 2022 is 194,458,327, and then it divided by sales, and it was 1,150,960,031, and then divided with 365 days, and then the result is 61.67 days. Nah, so we can analyze from this average collection period in Samudra Indonesia company in 2022 is the average period to collect account receivable is within 61.67 days. So from this average collection period in 2023 and 2022 is we can assume that the average collection period is getting better in 2023 because it's more faster, a little bit faster than the 2022. So now we want to find the account receivable turnover in Samudra Indonesia company in 2023. Account receivable turnover. The formula for account receivable turnover is credit sales divided by account receivable, and then the number for Samudra Indonesia company in 2023 is 772,404,229 divided by account receivable, and the number is 129,772,906, and then the result is 5.65, or we can just conclude it as 6. So we can analyze that the account receivable rotates for 6 times in years because it was 6, so it's 6 times in a year. And then in 2022, so in 2022 you have the number is 1,150,960,031 divided 194,458,327. 327. And then the result is 5.6092. So the account receivable rotates for 5.92 times in a year. So we can see between account receivable turnover in 2023 and 2022, it's getting better, even if it's only a little bit, like it's just 0.03, but it's getting better. And then the last but not least is inventory turnover. And then the formula for inventory turnover is COGS divided by inventory. And the number for Samudra Indonesia company is 618,638,667, and divided inventory is 317,8624, and then the result is 194.6, or we can just assume that 195. We can analyze that the inventory is rotates for 195 in a year in 2023, and then in 2022 is the inventory turnover in 2022 is 756,8 5,7,399, and then divided with 3420283, and then the result is 221. So the inventory rotates for 221 times in a year, and then we can see the inventory turnover in Samudra Indonesia company is worse than in 2022. The inventory turnover in 2023 is 195, and the inventory turnover in 2022 is 221. So it's getting worse than in 2022. So we can conclude from all of the data. So we can conclude from this data that we have right now. Based on the data that we have, the Samudra Indonesia company, the 2023 data is better than the 2022 data, except the inventory turnover, because in 2023 it's getting worse than in 2022. So, in my opinion, the Samudra Indonesia company is made improve in 2023 than in 2022, because the number 1 and the number 4 is getting better, only the number 5 is getting worse. Thank you.
The next one is capital structure ratio. So the first one is debt ratio. In the debt ratio, there are debt to asset ratio, which is DAR, and the formula is total debt divided by total asset. And from the data, for the total debt, we got 571.449 and 588. And then for the total asset is 1.256, 963, and 375. It's equal 0.45 and converted into percentage, so it's equal 45%. And for the 2022, the total debt is 506.933.368 divided by the total asset, and the total asset is 1.153.416.013, and it's equal 0.44, and we converted into percentage and it's equal 44%. So the debt to asset ratio in Samudra Indonesia is getting worse because the debt in 2022 is higher than the 2023. So the next one is debt to equity ratio, and for the formula for the debt to equity ratio is total debt divided by total equity. And Samudra Indonesia Tbk company in 2023 they got this much for the total debt, and this much for the total equity, and it's equal 0.83, and we convert it into percentage, so it's 83%. And for the 2022, the amount that we got is this much, and the total equity is this much too. So it's equals 0.78, and we convert it into percentage is 78%. So in debt to equity ratio in Samudra Indonesia Tbk is getting worse, because in the 2023 the amount is 83%, in the 2022 is 78%. And last one is times interest earned, or TI. So the formula is operating income, EBIT. EBIT is earning before interest and tax, and divided by interest expense. So in 2023, the data that we got is this much, and the interest expense, and equals 4.64. And for the 2022, the data that we got is this much, and equals 25.64%. So the time interest earned in Samudra Indonesia Tbk is getting worse, because the 2023 is smaller than the 2022. Thank you.
So we move to asset management efficiency ratio. For the first is total asset turnover. The formula is sales divided by total asset, and we have this amount, and we divide it until we get 1. This is rounded up, and this is for 2022, and for 2023. We divided the total amount of sales and total amount of total asset, and we get this 0.61, and we can conclude that company performance and total asset turnover is getting worse, because in 2023 the total asset turnover is lower than total asset turnover in 2023. So second is fixed asset turnover. The formula is sales divided by net fixed asset. We get this amount for sales, and we get this amount for net fixed asset. This is the data from 2022 in Samudra Indonesia Tbk, and after we divide it, we get this 2.64, and in 2023 we have 1.3. So every $1 of the company asset every $1 of the company fixed asset can generate $1.3. So from this data, we can conclude that fixed asset turnover also getting worse in 2023, because the fixed asset turnover in 2023 is lower than fixed asset turnover in 2022.
Thank you. So I'm going to talk about the profitability ratios between 2022 and 2023. So first, there's operating return of investment. How do we find that? We gather operating income divided by total assets. So in here, the operating income is 340,842,931 divided by 1,153,416,013. We divided that, and we have
0.3, or we change that into percent, which is 30%. So we summarize that every $1 of total assets can generate $0.3 of operating income. And the second one is operating profit margin, or we call it as OPM. In OPM, we find the EBIT divided by sales, total sales. So here the EBIT is 340,842,931 divided by 1,150,960,031, and we have 0.3, and then we change it into percent, which is 30%. So we can summarize that every $1 of sales can generate of $0.3 of operating income. And now in 2023, for the ROI, the same thing as 2022, but the difference is the operating income and the total assets in 2023 is different. Here we have 103,963,864 divided by 1,256,963,375, and we get 0.08, and we change that into percent, which is 8%. So we can summarize that every $1 of total assets can generate $0.08 of operating income. And now for the OPM in 2023, in here the EBIT is 73,006,370 divided by 772,404,229, and we get 0.13, and we change that into percent, which is 13%. And we can summarize that every $1 of sales can generate $0.13 of operating income, and only 13% of the sales can be the operating income, also known as profit. So we move on to the net profit margin, or we call it as NPM. So how do we find NPM? We find it with net profit or net income divided by sales. So in 2022, the net profit or net income, 320,094,114 divided by 1,150,960,031 is 0.28, and we convert it to percent, which is 28%. So every $1 we make $0.28 of net income. And after that, we move on to return on equity, which is ROE. We find ROE with net income divided by total equity. So in this case, the net income is 322,094,114 divided by 646,482,645, which is 0.5, and we convert it to percent, which is 50%. So every $1 we make $0.5 of net profit or net income. And now we move to the 2023. So the NPM and the ROE, we find it the same way as the year 2022. So, but the difference is the numbers are different. So in this case, we have for the net profit or net income, we have 103,963,864 864 divided by 772,404,229 rupiah, which is 0.09, and we convert it to percent, which is 9%. So with this, we can summarize that every $1 of sales can generate $0.09 of net profit, and only 9% of the sales can be the net profit. And then for the ROE, same thing, but the numbers are different. In here, the net income is 73 million 6,370 divided by 685,513,787, which is 0.11, and we convert it to percent, which is 11%. So we can summarize that every $1 of total equity can generate 0.1 $0.1 of net profit. We move on to the gross profit margin, is GPM. So we find GPM is from gross profit divided by sales or revenue. So in 2022, the gross profit is 394 million and is divided by 1.150 billion, and the result is 0.34, and we change it to percent, which is 34%. So every $1 we make $0.34, and we move on to return on assets, which is ROA. We find ROA from net income divided by total assets. So the net income is around 322 million divided by 1.153 billion, and it equals to 0.28, and we change it or convert it to 28%. So we can summarize that every $1 we can make $0.28. And for the 2023, it's the same thing, but the difference is the numbers. So for the 2023, the gross profit is 153.7 million divided by 772.4 million equals to 0.2, and we convert it to percent, which is 20%. So we can summarize that every $1 we can make $0.2. And then for the ROA, the net income in 2023 is 73 million divided by 1.256 billion equals to 0.06 or 6%. So we can summarize that every $1 we can make $0.06.